as a team, when you're building something new that has not been done before, those signals are really great to know that you're building something that's valuable.
Welcome to Scouting for Growth. Today, I am meeting with Naby Mariyam, CEO and founder of Coverhero, an insurance platform that provides cover for all types of gig economy hustle. The first product delivered by Coverhero is called Hustle Cover. And I think the offer was shaped and launched recently to fill the gap of financial insecurity for the growing gig economy worker, self-employed generation. So today we have with Naby. Naby, I was reading your LinkedIn profile. I can see that you have been doing a lot of things and you have shaped up Coverhero 4 years ago. Can you tell us a little bit more about your journey, how you entered financial services and insurance as well, please?
Yeah, thank you. Thanks for having me. The journey of Coverhero, before I started Coverhero, there's been a number of things that led to Coverhero. So a little bit of background could be helpful. The last two startups that I did was in gig economy and supply chain. So I have a bit of experience around building marketplaces, building gig economy based platforms. So I launched Australia's first rideshare platform called Ride Hero a few years before I founded Coverhero, and then had another on-demand last mile delivery platform called Zipmate. And then before that, I worked as a social scientist in academia for about 15 years, and then quit academia, transitioned into tech in the last 10 years. So I've built a couple of startups, worked in a couple of startups, worked on the corporate innovation side, worked on the education side. So worked in the startup industry for a good 10 years in different parts of the value chain. And about 4 years ago, after I shut down the last startup, which was rideshare platform for kids, my co-founder that I had the previous startup with was working on this insurance solution. And I wasn't really interested in insurance at the time. But I had this really, life-changing experience. My partner at the time got really, really sick, and we had to lodge all this insurance claims, which was kind of rejected. So I personally went through the whole process that led me to be curious enough to think, why is this so difficult? Why can't it be as simple as booking an Uber that takes me from point A to B? So then we got into an accelerator program here in Australia it's a corporate accelerator program called Qantas Avro Accelerator Program. So we started off with, building a product like Brolly in the UK, like a recommendation engine and a wallet. And then we realized to monetize that, we had to really interface that with the legacy systems in the insurance industry. So it was a massive growth curve. So Coverhero was still my side hustle at the time. I was still, part-time working in academia just to pay my bills and then working on the startup. And then 2018 was a really interesting year. I spent half of 2018 in Europe, actually in Munich with Work Eins Accelerator there, and then met a whole heap of, insurers and InsurTechs. And I met people like Koya and GetSafe and WeFox and all these, big names in Europe. And then I spent the rest of that year in the US, both East Coast and West Coast. And then in 2019, we were selected into Plug and Play InsurTech Accelerator Program in Silicon Valley, which was, an amazing program. And then we raised a little bit of kind of like pre-seed funding that year. And then we were going to go live in the US, which was our go-to market. But then the pandemic happened and I got stuck in Australia. So we went live in Australia. And then ever since then, we kind of like evolved around, is it direct to consumer? Are we going to build a platform that is going to be B2B2C? And then during this, the last 2 years, we were also in the Singapore FinTech Plug and Play Accelerator Program. So it's been really good working with the industry and building product around that. And then from a distribution perspective, it's been incredible getting the platforms that we want to distribute it through coming to us wanting the product. And I think, as a team, when you're building something new that has not been done before, those signals are really great to know that you're building something that's valuable.
Absolutely. So you mentioned two things. So you have expertise on the corporate side as much as from the startup side. So tell us a little bit more, what got you to make the jump from one to the other? And what were your top lessons learned?
To leave academia to jump into the startup world was more like an existential crisis, I think. I started my career very early. I went to university at 15 and I graduated with my master's when I was 22. And I literally grew up inside academia. So therefore, like, my whole identity was around being an academic. And by the time I was 28, I'd started my PhD. I was in a very senior position in my job. And then I kind of thought, like, where to from here? Like, what does my life look like for the next 10 years? And I had a whole bunch of friends that were working at Google and Facebook, and they were doing cool stuff. And I was in my, just started my PhD, and I was doing my research, and I really loved my research and teaching and my academic career. But I kind of felt like my impact in the world is not substantial enough. There's a lot of bureaucracy that comes with the corporate world, whether it's academia or insurance or financial services. So I kind of like got stuck and I quit. I quit and wanted to be entrepreneurial. And my first entrepreneurial project was creating a documentary series about the Maldives and travel food culture. So I have a background in hospitality and tourism as well. So I have like a whole wide range of different things that I've done in my career. So that kind of got my interest in entrepreneurship. And then I met a really cool founder who had sold his business in Australia. When he was very young, he built an accommodation booking platform. And that was kind of like my first introduction into the startup world. So we started building a similar thing for the Maldives, which is like an Airbnb for the Maldives way before Airbnb. And then he kind of got funding for his own startup and he moved to Silicon Valley. And then I was kind of like stuck in Australia. So I was like, okay, I definitely know that tech is where I belong and what I want to do. So I jumped straight into it and immersed myself into the startup scene here and learned as I went. And the biggest learning is it's very humbling experience to go into a whole different industry where you don't know how it's done after being an expert in academia. In my area, I was at the top, and then to go to a whole different industry and starting from the bottom is deeply humbling.
I'm not surprised. I have I went from big company to smaller companies, and actually, as you get closer to the real problems, in some ways, you have to unpack and use the resource very efficiently, I think, as well. So it's humbling to build. I think it's humbling to work with people, and also to coach people. To give them a path as well. And I think I got that from what you just said. Purpose sounds like purpose was important to you, and you felt that you needed to put your hands around something that you could say, here is what Naby has done.
Yeah. And for me, my background, I grew up in the Maldives in a very average family. I was born to an island of 200 people. So the likelihood of me being where I am is very, very small, right? And I've always been very passionate about equity and creating opportunity for people that don't have access to network. And this is something, the world really needs to do a lot more of, is creating that equity. And, it's quite topical even around funding and talking about International Women's Day and the this year's theme around, the breaking the bias. And all of these things are so core to my existence of who I am, because I lived through it and I had to fight through those barriers pretty much every single day. Leave Maldives and come to another country and then start over. And then, to get into tech and ticking all of the the diversity boxes and fighting against all of those biases to even build what we've built is I would say, huge accomplishment for the company.
Absolutely. So Maldives, Australia, I think I got to know you when you were in Germany, when you were in Europe. You mentioned Silicon Valley. So you've gone around probably nearly all continents. And so what have you learned around differences or similarities around the markets you visited as you build Coverhero?
I think a lot of similarities. The consistent theme is around making the product customer centric. I found it quite bizarre though, because not being from the insurance industry and worked in hospitality, it's like there's no other way without being customer centric. And talking to the insurance industry executives, it was just really weird initially. I'm like, so you guys don't design product around the customer? How do you design the product? Oh, we design it around the actuaries or the loss ratios and expense ratios. It's very product centric mentality rather than the customer centric mentality. So I was kind of naive thinking that that's how it actually worked, then learned how broken the supply chain of insurance is. But that got me really excited because I really love supply chain problems. I really love solving complex supply chain. Like if you look at it, e-commerce and transport networks, and these are the things that really gets me excited, like that are really non-sexy stuff, but that can have huge efficiencies. So there were a lot of similarities across Europe and North America and Asia. Speaking to the insurers, it was all about how do we build a product that customers actually want? One. Two, how do we acquire customers at a lower cost? So customer acquisition, retention was really, big themes that were coming up. Then there was a lot of conversation around disruption of underwriting, or how do we build a product that is going to improve the combined ratio, and then Lemonade and all of this, the early companies were all the hype back then, and it was more like, we're going to go direct to consumer sort of thing. And then I started seeing other verticals of insurance coming in and kind of like the real segmentation or the verticalization of InsurTech ecosystem, which I found really, really fascinating. And then the embedded insurance started coming to the surface. So I saw these themes of like, let's do things on blockchain, let's go direct to consumer, let's do, Trove is a really good example, right? Like they raised a lot of money, they wanted to do content insurance, and recently their assets have been acquired by another insurer. So in the last 4 years that I've been in this space, I've seen a lot of money being invested into ideas that may or may not work. And the bar that is set for insurtechs from the insurance industry is very different to the bar that is set for a startup that is from non-insurtech industry, right? So there is this kind of like big disconnect. For example, if we are talking to corporate VCs, they're all about, what new underwriting models have you built, or, how it's going to impact loss ratio, how you're going to solve like the broker model, and our agent's going to be there. So it's still very inside problem solving rather than let's leave this behind and look at it from the outside of the biggest problem that I believe that we need to solve for the insurance industry, and this is relevant to Coverhero, is distribution, is tech-enabled distribution. How do you build something that is tech-enabled distribution that could work like Shopify, or that could work like Uber? Not as in like build the Uber of insurance. I'm referring to the convenience of a product being able to be accessible for a customer. So that year, 2018, when I traveled around the world I spoke to over 300 insurance executives in all of these different jurisdictions, learned a lot about, the regulatory space, learned a lot about the value chain and what matters to the insurers. And for them, what really matters to them is bringing their costs down, retaining their customers, and, improving the claims experience, which were like kind of the big themes. And the way the industry is designed, they all happen independent of each other, which I found problematic and fascinating, because we were trying to put band-aids on the value chain when I first started. And then after spending a couple of years really understanding the industry, we realized that we have to go and build everything from scratch to really truly solve that problem. We can't put band-aid on systems that aren't built to be integrated. It's just like, even philosophically, it doesn't work, let alone the technology that uses it. So I had to be a little bit braver than I was before, after learning all of that we will have to start from scratch.
So it's fascinating, because we get that question a lot. You cannot put band-aid on things which are broken. And as you know, the insurance sector is really reliant today on legacy systems, and so which have been built in the 70s often, and through acquisitions, a lot of those organizations have many systems coming from many companies which do not talk to each other. And so when you actually start looking at that single customer experience, that unified customer journey, it becomes really difficult to do. And even if you try to put RPAs and APIs to do that by working with startups, it doesn't always work, right? It's what you are saying. Don't try to always hide it, but think through how you are going to do it better.
Yeah.
Tell us about Coverhero. So I want to hear about Coverhero, and I want to understand how you're building products, because when I looked at the company, I thought, okay, great, Coverhero. And then I found out that you're actually now developing really single products with their own brands, like Hustle Cover. So tell us a little bit more about that.
Yeah, so our philosophy is building a really valuable piece of software that connects the insurer to distribution. And it's and there are a couple of things that led us to take this direction. When we first started, we want to go direct to consumer and acquire customers that way. And along the journey, we realized to have a product, to build a company that could dominate a category, you need to find a gap and define and refine a category, right? So the category that we define and refine is called work integrated life cover. So what does that mean? So then we have to start with, like, who is the buyer of this product? It's somebody that has finished uni, left high school, going into the workforce, self-employed. What do they need first? They need to protect their income while they're working, to make sure that, they have these benefits and the income insecurities are covered, right? Then what else are they going to do? They might buy a house. If you're self-employed, getting a mortgage is extremely difficult due to cash flow issues. And then the financial services industry is so far behind in understanding the needs of self-employed segment, even outside of insurance, right? Even in general fintech, or even investments or retirement. So there's this whole emerging category that MasterCard predicts is going to be 50% of the global workforce by 2023. So it's a really massive segment that has kind of been accelerated by the pandemic and people realizing, but this has always been in the works. And the trends are, e-commerce is one big trend, right? The unification of that supply chain that has allowed people to just start a business like that and start shipping product at scale at very low cost has changed the way people look at work and like leaving the corporate world and starting e-commerce stores. That's one big trend. Second big trend is the rise of passion economy, or the creator economy. What that has allowed business owners or micro entrepreneurs to do is monetize their passion through these platforms. So we're talking YouTube and TikTok and Instagram and then I think the rise of TikTok during the pandemic kind of allowed people to build audiences at scale with like zero cost. Right now they can sell anything to this. So you own this real loyal fan base and you hold this power. So it kind of like democratize the advertising market. So the influencers kind of like change to, I'm not selling other people's products now, I'm going to monetize my own product. I'm going to be a monetizable person. So you have merchandise, you sell online courses, then on top of that, Now, the big brands want to capitalize on this, very loyal fan base. So you can sell products by dancing or TikTok or Reels or Shorts, right? So we've seen this like big new trend, and people are jumping on it. People are just investing very little, and they can build a user base. And all you have to be is relatable and funny and different to ads. Like Google and Facebook dominated this space. What we are seeing is with Reels and with Shorts and TikTok, it has changed the landscape of customer acquisition, right? So one, acquiring customers is easy, but then there are all of these self-employed people that don't have access to financial well-being. They don't have sick leave. They need to think about their retirement. They need to be able to live that lifestyle, earn good income, but also access financial services that would set them up for life. So that's how we think about product, right? So to be able to distribute that way, each product needs its own brand so that it doesn't require licensing and governance and all the compliance stuff. If you white label the product, like a lot of the embedded insurance companies like Cover Genius or Boost, then there is this whole thing around, then it's designed more for a big platform that already has a user base to design their own product. Our thinking is different. It's a very standardized product for a specific user group. Through a specific platform, you install a widget and then it works. So it doesn't require, configurations. It doesn't require, 200 different endpoints that you have to implement and building a front end on top of it. So we just make it as simple as, drag and drop our widget onto your platform and off you go. And then it's connected to our underwriting platform that will have all of these like core capabilities of a policy administration system and CRM and all this other stuff, right? So Hustle is the first API. Last year, we also made the announcement that, we'll be launching our home insurance API called Lucci. And in the works, we've got, 4 other APIs. There's a travel API, which has parametric flight delay in it, called Wings. We have a very specific mental health care API called Bounce. And then there's a more sophisticated, like a life insurance called Carbit, right? So all of these APIs are designed to be dragged and dropped onto a platform that can be seamlessly integrated onto the user flow. And we believe that is highly scalable across different jurisdictions around the world. And it is targeted for the self-employed sector.
So I was going to ask you, I assume you are starting in Australia, but, is that scalable? You just said, yes, it's scalable around the world. And the other part is, if I use your API, is my product called Hustle Cover? So if I use your API, is my product called Hustle Cover, or do I rebrand?
It's Hustle Cover, and then it would be underwritten by the insurance partner in that jurisdiction. So globally, it would still be known as Hustle Cover. It's kind of like Afterpay, whether you use Afterpay in Australia or US or overseas, it's still Afterpay, regardless of where you go. So it's the same kind of methodology of, embedded finance or embedded lending or embedded insurance, but with the same brand. And I think it's really critical to have that brand identity to really resonate with that. And then even in the self-employed sector or the gig economy, you have multiple lines of insurance. We position ourselves as the platform that will protect you and your assets. The core insurance products like income protection, life, health, and health, rather than the commercial ones.
Yeah. And I think I would like to go into trend now with you, Naby. So you have actually highlighted we are going to a world of creator economy, gig economy workers, self-employed. And I would add as well, us, digital nomad. We want to work wherever we are in the world. So when you look at the trend, when you look at your data, can you tell us what you see happening in the next maybe 3 to 5 years around that group of workers?
So in the self-employed sector, there are a couple of different segments. It's not micro segments. So there's the knowledge economy, and there is the more trades economy, like your traditional contract workforce that has existed, right? And this could be, electricians, this could be construction workers, this could be transport workers. And this particular segment, they're physical labor force that works exactly like a software engineer or a digital marketer or a Reels creator, right? So these are the two different groups, and then you have different income levels. So let's say, for example, if you are a student holidaying in Australia on a student visa, you might be working as an Uber driver or on a number of platforms, and you would be earning certain amounts of income, but that is not your job. Like, that is not your dream, right? So it's a very transient workforce. Then they might have another side hustle where they're building their e-commerce business on the side while they get this money to funnel that into building their real passion. So we see people with multiple side hustles earning from $500 a week all the way up to $2,500 to $3,000 a week. Now that's substantial income that needs protection, because they're relying on these multiple sources of income to live their life. And if something did happen to them, then there is nothing to fall back, right? So that's a really big trend that we're seeing, is micro entrepreneurship or sole traders or contract workers just being able to earn, 100K, 150K a year through their multiple side hustles, which is very cool. Because if you're a corporate person, you kind of have this like pay scales, and then you have to go through that corporate ladder in order to increase your income. So by being self-employed, you have unlimited potential to increase your income, to bring your level of wealth up, and you're not stuck to, corporate is the only way to go. A lot of the reason why people don't want to quit corporate is when you quit corporate and go into self-employment, you lose all the benefits and the security, and you got to pay your bills, you have a mortgage. So we want to create, hey, you can choose to be self-employed without compromising your financial well-being, without compromising your sense of security and safety, and it's an option. Whereas before, it's the risk reward didn't kind of, there was no equilibrium there. But we're seeing we're not the only ones in the market tackling this particular segment around the world. So there are a number of players, whether it's neobanks or whether it is, neo lending companies that are coming into the sector, really trying to cater to it. So we're seeing that this is going to be a substantial part of our lifestyle and workforce. And without even talking about, the great resignation, people are leaving the corporate job. So lifestyle and well-being, something that we've fought for decades, right? We want work-life balance. What does work-life balance look like? And we call it work-life integration. Not having this kind of, factory mindset of you work 9 to 5. No, if you're running your own business, the 9 to 5 doesn't apply. So it's a period of evolution and unpredictability. We're just rolling with the waves as well, because people are still trying to figure out what does this model look like of work-life integration, connecting with other people, also working from home. So I think kind of like we're in the state of flux. The big trends are people value family, people value their well-being, people want to claim themselves back, and the money isn't the only driver of those choices. I guess we'll see the impact of this in like a couple of years, maybe like 4 years or so. It's just too soon to tell.
Too soon to tell. Still, I think what we've seen here in Europe is, you're absolutely right, that great resignation and even finding and recruiting people has become very, very difficult. I've talked to some peers in the industry which still are using a very traditional model. And when they try to find talent, the first ask is, what is your remote working policy? And if there is no remote working policy, they are actually often likely to lose the talent. So that purpose is super important. I think also, as you said, money is not as important as people thought it might be, not for everybody, I would say.
Yeah.
But that balance between, do I need to do the job between 9 to 5, or maybe I could start at 10 and I prefer to work later at night, and maybe I can do the job when I am, somewhere else. Now that bring other issues in Europe, where, when you look at remote working, if you're working in another country for a number of days, there are tax implications. And so often I think people forget that as well.
Yeah.
Anyhow, I wanted to also ask you, you mentioned embedded. It's a year of embedded finance, embedded insurance. I did some analysis around the embedded finance market. I think there's $32 billion, which has been invested in ventures within the embedded space. And partly last year, probably a third of that investment was in 2021. How do you see embedded insurance play within the embedded finance world? I also see different models. You've mentioned some, infrastructure-led. Sales and distribution probably was the first way to go into embedded, but then you also see digital ecosystem coming together, where groups of company comes together to solve for a specific client needs. Tell us more about your views around embedded.
I think embedded insurance and embedded finance is the way forward, right? And this ecosystem model, but not every product can be embedded. And not every product should be embedded. It depends on the customer's needs and the simplification of it. And we need to look at what is there in the distribution or the demand aggregators, what exists currently, and what are the gaps that we could feel like from an insurance perspective, right? So if we look at other embedded players, the low-hanging fruit was like warranty products. Super easy, plug it onto eBay or in e-commerce. It's a micro insurance product, easily done. Then as you get into personal lines, the product becomes more complicated. The underwriting becomes quite sophisticated and quite interesting as well. For example, our product, it's a super simplified product, which we won Emerging InsurTech of last year in Hartford, which is quite cool, is generally a product that is, underwriting process is super complicated. We have designed that product to be, somebody can buy insurance in 15 seconds, right? And it's just one example of the data that we require customers to fill by themselves can be pulled through platforms, and we can design amazing products that makes underwriting really, really sophisticated through embedded insurance. And I think that's where I see the real opportunity for embedded insurance. Yes, it makes the customer experience brilliant, right? Super seamless. But then it allows us to collect non-invasive data through that customer journey. We don't need to collect all of the data upfront to design a product. So it opens up new avenues of product design that insurers really struggle, and just like a questionnaire, tell me everything about you, especially in the life insurance space. It's like, I don't even tell anybody about this. I don't want to tell you all of these details. Do we really need a DNA sample to sell somebody life insurance? I mean, there are companies that are doing that as well, right? So for us, it's like, what is actually necessary? Collecting data for the sake of collecting data is totally unnecessary. And when you collect the data, at which part of that user journey is quite critical as well. And to design product, you don't have to collect the data directly from customers. You can still build really interesting models through other third-party data that exists specifically in the MarTech world, right? Or ad tech world. You have this super sophisticated, deep user behavior data, which is basically what you need to build underwriting models. Why do we need to manufacture that data when the data already exists and can be accessible? And then by combining the availability of data at scale, designing a product that creates a very seamless, simplified, one-click kind of experience. Because we have to remember, customers have, human beings generally in the digital world, we have very short attention span. We don't like filling forms. We want things to be done super quickly. So the real opportunity for embedded insurance is hyper personalization of a product so that the customer is actually protected, so that they don't have to make those decisions, right? So let's say if you go to a supermarket, if you give me 20 different types of cereal, I would have decision fatigue. Customers don't want a lot of options. In a world where the data exists that is accessible, we should be able to build those parameters and then say, hey, this is what is the best product for you based on your banking data, based on some of your behavioral data, and then ask the customer, opt in for a few other things that might not be available, right? So I think embedded insurance is the holy grail of super personal or hyper personalized insurance capability for some of the complex products that are out there that people really, really need. And while we're designing that insurance, it also simplifies the claims process, which is the thing that really matters in insurance, right? Is when somebody does claim, how quick and how easy is it to process that claim? And if we already have the data, if we've already got that verification, then it completes the customer experience. So just by selling through the distribution platforms isn't enough. We have to think through how we're going to close that loop around, the moment of truth is when a claim is lodged. And by having that data already accessible, verified, makes the customer experience like magic.
Let's make the customer experience magic. And I think it's probably an aspiration for a lot of us. When I think about insurance, often, in Europe, still 90% of the insurance product are sold through distribution, so brokers, through agents. And so therefore, often it's the reason why insurers have very little knowledge about the experience that they need to deliver for the customer. And being able to change that, I think, is probably revolutionary, and digital allows us to do that. I would like now, Naby, for you to talk to founders, entrepreneurs, and in particular, female entrepreneurs. Can you tell us your journey as an entrepreneur who had to raise funding? When we talk about corporate venturing, we talk about sourcing for venture, we talk about building ventures, and also understanding the founder's journey from him or her acquiring or accessing capital. There's a lot of biases we talk often about for women trying to raise money. And we often also talk about the difficulties today to actually access capital in general. Tell us about your journey and give us some tips for the founders who are out there.
The journey has been difficult. It's very challenging. And the reason why it is challenging is because of these biases that we have, and also the lack of role models for women. So we punch below our weight, which is, and I'm guilty of doing that too, and being ambitious enough. So that's one of the things. Secondly, it's the biases, and that's a really hard problem to solve, because these biases are implicit. So it's difficult to argue with it. I think women have to do a lot more and prove a lot more to get the trust of the person that is writing the check. And then there's biases around typical women startups should build women-led products for women, right? So if you have women working in a traditionally male-dominated industry like financial services and insurance or investment, anything where the boys club exists, and if you're a female founder trying to build a business there, it becomes extremely challenging. If I was designing some really cool tampon, it might be a lot easier for me to raise that money because it's relatable. It's like you're a woman, you understand this problem, and therefore there's a higher chance of that being successful. When I'm trying to build an insurance company, they're like, this is not the face of insurance. Insurance is traditionally, a men's or a boys club thing. So there is this like subconscious lack of trust around when we try to do things that are outside of what the world knows, right? So you have to fight against that as well. And no VC or an analyst is going to tell you to your face, oh, you're not investable because you're a woman. Absolutely not. It doesn't happen like that. It's like it happens in these two parameters. One is, you have the believers club and you have the non-believers club. And in a conversation, and there's actually a TED talk about this and a PhD written about this, what are these biases and then how does it happen? Interestingly, both women funders and male funders discriminate against women the same way, right? It's not specific to male. And this just happens. And the way to navigate through that is when you're being asked questions about your startup, one camp asks about, tell me how you're going to build a unicorn company. Tell me all the potential. Tell me about the dream. Tell me about the vision. Tell me about growth, right? And these are the investors in their line of inquiry when doing due diligence or speaking to female founders. They're the believers. They're the ones that are likely to invest in your company. Then you have the non-believers. So in a pitch meeting, if you get questions around, tell me about the risk, tell me all the reasons why it's not going to work. And they start going down this path of, I'm starting with a baseline of I don't trust you. And then the line of inquiry is around, you need to prove me wrong. And that is very difficult. So what do you do? So I've experienced both. In fact, I have a list that I have made along my startup journey, the investors that are on the I don't trust you camp versus I believe in this possibility where they don't have those biases or their biases are less. And one day I'll be able to talk about what was my experience and who are the believers and the non-believers. But I think the essence of that is when you get these questions, just be aware and then divert the narrative to, hey, these are the risks. Every startup has all of these risks, but this is how we're going to overcome that and move towards the path of growth. Because startup as an industry is about creating something new, creating something different. And that requires visionary thinking. That requires, being able to see something that doesn't exist now, that is going to exist in the future, to be able to look at that end goal together. And if venture capital decision makers aren't able to or don't have the trust to see that, it's going to be a very hard sell. And it's not a meritocracy. It's not because you're the smartest woman or you're capable. Like, a lot of those things are important, but it's less important when it comes to these biases. So it's a very difficult thing. I mean, 2% of funding going to females is really terrible. And I'm kind of like sick and tired of this dialogue, because I've been part of this conversation for a decade, and we're seeing a lot of new funds, especially outside of Australia, actually US and Europe, women-led or specific diversity groups setting up funds. And I hope that is a good start to change the market, where there are very specific mandates around scouting for female founders. That's the third point, right? Network access is a real challenge for females. We don't go and play golf with the boys, and therefore we don't know who are these people. And investment or anything to do with business is all very relationship based. And to be able to raise funds, you need somebody to open the door. You need to spend enough time building that relationship, building credibility, and it just doesn't happen like that. And if you are a second time or third time founder, then it's highly likely that you'll be able to raise funds a lot easier. But you also need maybe champions that is going to open these doors. So it's very complicated, complex industry and deeply challenging. I don't know if I have the answer to this question or what I can say. What I would say is, don't look at what's happening outside. Stay focused on what you're doing, and just be very objective about your fundraising, right? Just talk about the passion, talk about what you're doing, but also have like this deep conviction. And this is what I have learned. I get all kinds of feedback from investors. Some of them are utterly useless because they don't understand what we're doing. then you get these super interesting investors that will give you really critical feedback. But when you listen to that feedback and you make the changes, then you become actually quite investable. And this is one of the things that I have learned, because female founders don't get access to, like, we don't see what other founders are pitching, right? Or how they're pitching and what that looks like. So we exist in vacuum. And then when you speak to honest VCs that actually like the business or actually maybe like the team and they really want to be part of it, but then you might not be pitching the right way. There might be like key ingredients missing in the pitch or the storytelling. And there are so many things around, and I'm still learning as I go. And then the other one is confidence and self-belief. Am I deserving of this? And not, doubting ourselves, because there aren't 50% female founders in the world. So we think, oh, we're trying to do something that has not been done before. I don't know if I can do this. So there's all of these things. Whereas I think even in the corporate world, men are more likely to apply for jobs that they're not qualified to do, whereas women will wait until they meet all of the criteria, right? So these are inherent gender-specific issues that we have, and it exists in the startup world too. So women punch below their weight. We need to punch above our weight.
Yeah, and I mean, you actually highlighted a few very important facts here. Communication, probably we need to have two paths, the negative investor path, pitch, and so therefore prepare for it, the positive investor questioning, and so prepare for that as well. Not be flustered, because they are going to be happening regardless, and it happens as well to men, to be honest. It's about also building a community and finding ways to find peers who can actually support one another to actually learn to pitch right for the investors. Investors are investors regardless, and they are looking for metrics, right? They are looking for your CAC, your AIR, your MRR, and a number of other metrics, which one needs to master very well. And, the financial modeling, you need to have your 18 months to 12 years, and a lot of things comes into getting access to funding, which is beyond just pitching and the storytelling as well. And understanding and unpacking those ingredients will become more and more important, because at the end of the day, men or women, everybody has to actually sell that idea the best as possible.
Yeah, absolutely. And telling your story through numbers is extremely powerful. It becomes so tangible when you can tell your story through numbers in a very objective, dispassionate kind of way.
Absolutely. So Naby, what would be your last word you would like to leave with our listeners today?
My last word would be, don't stop believing. No matter how many times you fall down, get back up. If you have conviction in what you're doing, falling down is not a reason to quit, and it's not over until you decide it's over. So know when to quit.
Thank you. So Naby, where can people find you? Tell us, where can we find you if we want to find a little bit more about Coverhero?
So hustlecover.com. You'll see, the company history, what we're doing, all of our announcements, all that kind of stuff. On socials, you can find me on LinkedIn, Naby Mariyam, and on Instagram, you can also find me on Naby Mariyam. I'm very active on those two platforms. And you can just directly reach out to me, and, or you can email me at naby@coverhero.com.au.
Thank you, Naby. Really grateful to have you today.
Thank you. Thanks for having me. It's been a pleasure.